Thanks for staying with us. For today's Business Matters, we have Don Ma here with us. Don, it's always good to see you. What's happening today in the world of business?
Yeah, of course, always good to see you guys as well. So let me start off with Social Security, actually. So on that front, what's happening is that monthly Social Security checks will go up by 2.5% next year, and compare that to nearly 9% adjustment in 2023. The Social Security Administration said the steady decline of inflation limits the annual cost of living adjustment. So starting in January, payments will increase by about $50 for the nearly 68 million Social Security recipients. And now a warning from Delta Airlines. The carrier is expecting a revenue hit from the presidential election. Delta is saying that election-related uncertainty would weigh on travel demands during the 2 weeks around November 5th. It expects travel to pick up the weeks after, though. And now on to IKEA. Has cut its prices, but its annual sales have fallen 5%. The CEO of Inca Group, which owns most IKEA stores globally, said IKEA cut prices after a decline in store visits and purchases. The Swedish budget homeware retailer is expecting to make a recovery next year as lower interest rates drive more people to buy homes. Now, Pennsylvania Governor Josh Shapiro sharing the details of his conversation with tech entrepreneur Elon Musk. Shapiro confirmed to NBC News that the two spoke over the weekend. Musk was in town for a Steelers-Dallas game with a mutual connection, which was Hollywood producer and investor Thomas Tull. Shapiro says the two called him and discussed ideas Musk had about investing in the state and as well as creating jobs and economic opportunity. Although Musk and Shapiro are political polar opposites, the governor noted that politics actually never came up during the call. And we're seeing a slowdown for German luxury automakers in the world's largest car market, China. BMW and Mercedes have reported a crash in its third quarter sales. BMW down 13% and Mercedes down 3%. Foreign car makers are facing stiff competition from local brands offering cheaper models, especially EVs, that is. Demand in general in China is suffering from a sluggish economy. European automakers are also in the middle of trade tensions. The EU has imposed hefty tariffs on Chinese-made EVs. And in response, China is considering tariff hikes on large engine vehicle imports, which would impact German producers in particular. Now, the chairman of Toyota has shared details of the company's outlook for an EV-only future. He says it would spell job losses for manufacturers, suppliers, and more. Let's now go to NTD's Sean Marshall for the story.
Toyota Motors chairman Akio Toyoda said on Thursday that a shift to an EV-only future would lead to job losses for those working on engine-related technologies, including industry suppliers. Toyota, the world's biggest automaker by sales, has been more cautious in its approach to EVs than other makers. As sales of EVs slow down, Toyota is benefiting from the hybrid vehicle demand, including in Toyota's top market, the United States.
Recently, I've even started counting the number of Toyota and Lexus cars sharing the road with me when I'm driving. And I have to admit, it's pretty amazing. But I'm reminded of the Chinese proverb: the taller you grow, the deeper you bow. And I think we should all take this to heart, because even though profit and volume are the result of our hard work, they shouldn't be our primary goal.
Toyota travels the road of what it calls a multi-pathway strategy that includes EVs, hybrids, hydrogen fuel cell vehicles, and other powertrain technology. Warren Fix of Car Coach Reports says, quote, Toyota is correct. Volkswagen is warning of layoffs, factory closings, and even overall survival. The car industry has been suffering with subpar profitability for too many years to remember. The Toyota chairman tells reporters, quote, there are 5.5 million people involved in the automotive industry in Japan. Among them are those who have been doing engine-related work for a long time. If electric vehicles simply become the only choice, including for our suppliers, those people's jobs would be lost. Toyota adds he likes gasoline cars. In January, Toyota said EVs would at most account for 30% of the global auto market, with hybrids, hydrogen fuel cell, and fuel-burning vehicles making up the rest. He did not specify a time frame for that forecast. Sean Marshall, NTD News.
Now let's talk about Warren Buffett's Berkshire Hathaway. Appears to be boosting its bets on Japan. The iconic investment firm has raised the equivalent of nearly $2 billion in a yen-denominated bond offer. Now, a term sheet reveals that this is the largest bond sale in the Japanese currency for the firm in 5 years. The yen or samurai bond issue signals Buffett's deepening association with Japan's capital markets. It started in 2020 when the firm first announced it would buy stakes in Japan's trading houses. Since then, its annual report shows it has raised its stake in Japan's top 5 trading firms to about 9% each. Now, TD Bank has become the largest bank in U.S. history to plead guilty to violating a federal law aimed at preventing money laundering. The Justice Department says the bank ignored red flags from high-risk customers for years and created a convenient environment for bad actors to exploit. TD is Canada's second biggest bank and the 10th largest in the U.S. Authorities say the bank failed to monitor more than $18 trillion in customer activity, enabling multiple money laundering networks to transfer illicit funds through accounts. So the plea deal includes a rare asset cap and other limitations to its business on top of a $3 billion penalty. And Hurricane Milton is expected to batter Florida's already troubled property insurance market. The storm and its aftermath could potentially send prices surging and threaten coverage in the region. NTD's Andrew Thomas has the details.
Florida already has the highest insurance costs in the country. Analysts estimate Hurricane Milton could cause between $60 and $100 billion in insured losses. That would be in the same ballpark as Hurricane Katrina in 2005. The costliest natural disaster in American history caused $100 billion in insured losses after it tore through New Orleans. Florida is high risk for insurance. According to WeatherSource, the state's zip codes account for 78 of the 80 riskiest areas in the country. Some insurers pulled out after Hurricane Andrew in 1992, leaving the market to smaller, less equipped companies. Some 40 Florida insurers have declared bankruptcy or otherwise failed since 2003. That compares to only 37 in the rest of the country. Those that stay in business can be hard to get a payout from. Weiss Ratings found that 6 of the state's largest providers rejected nearly 50% of their claims in 2023. According to the Consumer Federation of America, roughly 1 in 13 homeowners in the United States remain uninsured. Andrew Thomas, NTD News.
All right. Joining us now is Brian McCarthy. He's the chief strategist at Macro Lens, that is. So, Brian, China's economic planning agency announced measures to boost its economy. To start off here, Brian, what are some of the problems with the Chinese economy in your view?
Well, the macro problem is called debt deflation. It's similar to what happened in Japan post the housing bust in 1989-90, similar to what happened to the U.S. and much of the world in the 1930s. China is laden with a lot of unserviceable debt. This is weighing on the rate of nominal growth. They're struggling to get interest rates down to levels below the nominal growth rate, which would incentivize people to borrow. So people outside of the government sector don't want to borrow. This is exacerbating the deflation problems. The weak asset prices in the wake of the housing bubble are weighing on all this. And it's the kind of situation that cries out for an aggressive monetary response to break the deflation. But I don't really think, other than a 20 basis point rate cut from the PBOC, we've seen anything yet that you could term aggressive.
Do you feel Beijing is worried about anything you said right now?
They're certainly worried about it, although, one undercurrent in all of the announcements we've gotten. So we've heard from PBOC, we've heard from the Politburo, we've heard from the NDRC, and on Saturday we hear from the MOF. We might get some critical information on the size of the fiscal package, so how many special or supplemental bonds they're going to borrow, over the remainder of the year and into early next year will give us some sense for how big the easing of fiscal policy is going to be. As I mentioned, they cut interest rates 20 basis points, and they've done a bunch of other stuff that sort of none of which is all that dramatic, but they've put it all together and tried to make a big show. So clearly they're concerned. However, I would point out that the undercurrent through all of these announcements has been to sort of stay on course for high quality development. Okay, that is the strategic plan that Xi Jinping has laid out. One aspect of that they've made quite clear is emphasizing quality of growth over quantity. And all of these policies have been termed incremental by a number of policymakers. So they seem to be trying to send a signal that the market doesn't want to get, that this isn't a strategic shift. So the market has visions of China reverting to something sort of pre-pandemic where massive infrastructure, goose construction, and we see legitimate 5% growth rates in China. Right now retail sales is barely above 2%. So while they're striving to make a 5% GDP target, they're not actually anywhere near that. So I don't think the messaging is suggestive of a strategic pivot in any way, shape, or form. Again, they keep calling these policies incremental. I think we'll see more of that from them off on Saturday.
So with the issues that you mentioned just now, do you think the country is going to achieve its 5% growth target?
I think they'll probably tell us they grew at something like 4.7 or 4.8, and then next year they'll try to tell us they're going to take that down to 4.5, perhaps. But those are real growth rates. Deflation is they're experiencing deflation, so inflation is negative. So even if they are growing at, say, 4.7 real, it's only 4 nominal, which is, really where, corporate revenues come from, where return on investment comes from. The debt you might borrow to invest in something is nominal. You need nominal returns. This is the problem with being in deflation. So, honestly, I don't think they're anywhere near 4%, but they can call it whatever they want to call it. But we see, again, retail sales, I think it's 2.1, and fixed asset investment, which is a big driver, has been a huge driver of Chinese growth the last couple of decades, probably end the year in the low 3s. So, they can call it whatever they want, but they're not growing quick enough for these debt problems to do anything but get worse. For that to get better, they need aggressively reflationary policy, which in my book will require delinking the RMB from the dollar. That's not on their agenda at this point. So, given that constraint, I don't think they're going to be able to come up with anything that's going to change the macro story anytime soon.
All right, so you mentioned deflation. Why is consumer spending lagging?
It's just a question of in the wake of a property bust, asset prices decline. Organizations and individuals are laden with debt that becomes unserviceable because the asset bubble has popped. So non-state actors don't want to borrow in that environment because they already have too much debt. It's the classic, the Richard Koo balance sheet recession, basically. In the wake of the asset bust, balance sheets become impaired. Organizations don't want to borrow and invest. They're not building any more real estate. Even the real estate policy, the market got excited about them saying they wanted to stabilize the real estate market. The first thing they mentioned was strictly control new construction of commercial housing. So they're just not, even on a local government level, let alone private sector, there's little interest in borrowing to invest in the wake of this asset bust because balance sheets are impaired. And then that just simply creates a vicious cycle where credit growth slows, monetary growth slows, and it's very hard for the central bank to get to an easy monetary policy stance in that environment. In the US in 2008, and Europe got pushed to the zero lower bound, Japan got pushed to the zero lower bound, and then you get stuck. And in China, the zero lower bound, there isn't a zero lower bound. The lower bound is probably 1 something because the households are holding so many bank deposits, it's really politically difficult for them to push rates to zero. So they're sort of stuck, in a way that Japan was for a good 15 years post 1990.
All right, Brian, that's all the time we have for you today. Thank you very much for coming on.
Thanks, Don.
All right, next we have Beijing today announcing sanctions targeting several U.S. defense manufacturers along with some company executives. So that's in response to the sale of weapons to Taiwan. 3 U.S. firms that produce defense equipment and arms, as well as 10 high-profile managers, were hit by this new round of Beijing sanctions. So that's by freezing their assets or properties in China, preventing from doing business with Chinese companies and banning them from entering the country. Beijing imposed the sanctions on the Taiwanese government's 113th birthday, and they take effect immediately. Last month, Beijing also sanctioned 9 U.S. defense firms for the same reason. Taiwan is China's core interest. The Chinese Communist Party has vowed to take the island by force if necessary. Meanwhile, the U.S. is bound by law to help Taiwan to defend itself with weapons that it sells to the island. And now you can bet on who will win the presidential election on the online exchange Kalshi. The Commodity Futures Trading Commission is fighting to take it down. Here's the story.
Betting on the outcome of the upcoming presidential election is now available on online exchange Kalshi. Currently, 52% are betting on Trump, with over $4.6 million at stake. Commodity Futures Trading Commission Chairman Russ Benham is fighting to make this kind of betting illegal.
If there is manipulation of these markets, if someone does take a position, long or short, which would essentially be on a candidate, and then potentially puts out news that's not necessarily true, this could spiral into a situation where you have manipulation of elections.
Benham recently told CNBC that this is the same type of manipulation we see in the stock market. He says he doesn't want it in elections as well.
We have to have a line where we draw certain financial contracts. We don't want to commoditize elections.
Kalshi co-founder Tariq Mansour says he believes the law is on his side.
A lot of people are going to speculate, and that's fine. It's a good thing because that brings liquidity, that brings activity, that brings volume. And you're sure people, if people are doing research on the weather or climate and they want to trade and make money off of it, that's a great thing.
Mansour says it's a way for people to monetize their knowledge. They can also use it to reduce risk.
There's also a certain set of people that are actually hedging themselves. They're protecting themselves from, I'm, for example, someone that is worried about student loans. And so if it wasn't forgiven, they would get paid some amount of money that they could use to basically pay the student loan.
The CFTC prohibited Kalshi from having political bets on its platform last year. Kalshi sued and won after a long legal battle. The judges saying the CFTC failed to show the public will be irreparably injured. The CFTC disagreed with the outcome.
Their argument is that maybe if people bet too much, too heavily on one side, that's going to sway the voters. I would argue that everything we watch on mainstream media, outside of NTD, which I love, it's already swayed.
Former hedge fund manager Vijay Marolia doesn't think betting will sway elections much in comparison to media influence and lack of voter education.
All right, now on to Wall Street. Main indexes closed lower today. Investors looked at the higher than expected inflation report and unemployment claims for indications of the health of the U.S. economy, and as well for the path for interest rates. Both the S&P 500 and Dow had notched record closing highs in the previous day's session. Now, during today's session, energy outperformed other sectors as oil prices rose. Oil futures were rallying as U.S. fuel use had spiked ahead of Hurricane Milton, which made landfall on Florida's west coast late Wednesday. Oil prices are also being supported here by supply concerns related to conflicts in the Middle East. Investors are also preparing for the third quarter earnings season, with major banks scheduled to report results tomorrow. All right, and that's all the stories today in Business Matters. Back to you guys, Carrie, Fiona.
Well, a lot of stories today, Don, but I have to say that one about gambling on the election is certainly, that's pretty far out there.
Yeah, I'm sure, even though, as you say, it's far out there, I'm sure there's plenty of people who's making bets, whether it's Kamala Harris or former President Donald Trump.
Well, I myself am not much of a gambler. I don't know about you two gentlemen.
Well,
Yeah,
you know, sometimes I play these online casino games, but I don't know. I probably wouldn't put down real money.
Yeah, indeed. I'm going to stay out of the fray with this one, I think. But
That's right. I'll just take a back seat, watch how the presidential election goes.
Especially with how tight the race is. I feel like this is purely a gamble. There's really no strategy here.
Well, indeed, just like a sporting event, people gather to watch the outcome. Certainly, there will be watch parties for the election in just a couple weeks now. So we'll see you back here tomorrow, Don. Thanks so much.
Thank you, Don.